Hi, my name is Doug Knoll, and today I want to talk about how to set up a self-directed gold IRA account with Regal Assets. And as part of all this, I want to give you my free 10-part training on how to invest in gold, and also give you a free precious metals investor kit from Regal Assets, and the link will be at the end of this video. One of the best ways to invest in gold is with a Regal Assets self-directed gold IRA. But before we get into all of that, I'm an investor, not an advisor. My opinions are my own, and I have an affiliate disclosure. Financial Freedom is my professional review YouTube channel. I may receive compensation from the companies whose products I review and recommend. Financial Freedom is independently owned by me, and the opinions expressed here are mine alone. Although I do my best to be objective, my recommendations may not be neutral or independent. So always be sure to investigate, ask questions, and seek professional advice on any investment decision you are contemplating. In a moment, I'm going to show you why I have moved out of the stock market and into cash and gold. What I see coming is, to me, very scary. But first, what is a self-directed gold IRA? And what's the difference between a traditional IRA and a self-directed IRA? How do you set up a self-directed IRA with Regal Assets? And what services does Regal Assets provide in this process? Well, first of all, let's look at the difference between a traditional IRA and a self-directed IRA. In a traditional IRA, you hold securities and cash such as stocks, bonds, certificates of deposit, and things like that. And basically, you hold them in a trust, and typically with a investment firm or a bank, and you get to direct through your investment advisor how all of that is going to be allocated and invested. And you can make changes in your portfolio without tax consequences, and you only pay taxes on a traditional IRA when you withdraw the money when you retire, or at age 72, which is right now the required minimum distribution age. Self-directed IRAs are a little different. A gold IRA is an IRA that allows investors to hold gold coins or bullions or other precious metals as investments. But here's where the difference is. In a traditional IRA, there's a custodian that basically holds your investments in trust for you, but you get to make the investment decisions. In a self-directed gold IRA, there has to also be a custodian, but you must invest in investment-grade bullion, that is bars of gold or precious metal, or coins, and the gold must be stored in an IRS-approved depository so that there can be a clear accounting of what's happening to the gold. In addition, a traditional gold IRA may have a setup fee, but typically the only other fees are going to be investment advisor or brokerage fees on transactions and buying and selling the securities that you're holding in your traditional IRA. In a self-directed gold IRA, there are a few more fees. You may have the following costs. Typically setup fees, but oftentimes, especially with Regal Assets, that is waived. There's an annual administrative fee with Regal Assets. That's about $100 a year. You're going to have an annual storage fee, which is around, with Regal Assets, $15 per $1,000 of invested gold per year. There's usually a minimum purchase amount, which with Regal is $10,000. And there's a cash out cost. Typically, you're going to buy at retail and sell at wholesale. You're not buying gold because you're speculating on gold, you're buying gold to hold value. But there is a cost associated with it, and it is, of course, like any other investment, possible to lose money with gold. So setting up a Regal Asset self-directed gold IRA is very straightforward. You can do it online, and I'll give you links for all of that at the end of this, and follow the process, and then talk to an account manager and move forward from there. The account managers are there not to sell you on gold or anything else, but to help you make sound financial decisions. Earlier I said we would cover why I have moved out of the stock market into cash and gold. So let me first share with you the stages in a stock market bubble. So this is developed by the work of economists that developed this model back in the 1970s to try to understand market dynamics. And as you can see, there are 4 phases: the stealth phase, the awareness phase, the manic phase, and the blow-off phase. And you can see that the smart money comes in at the stealth phase, institutional investors come in the awareness phase, and then the general public and day traders come in the mania phase. And then you can see on the far right, it goes from enthusiasm to greed to delusion to a new paradigm. Then there's a drop-off where you see denial. And then there's the place called the bull trap. There's a bull rally with the return to normal. And then you see a precipitous drop from fear to capitulation to despair, and then ultimately a return to normal. This is the typical market bubble that we have seen many, many times in the 20th century and now in the 21st century. And let's just take a look at the S&P 500 and kind of look at what it's doing. And you can see that from about 2015 on the far left until right now at 2020, in mid-2020, it is eerily following the path of all stock market bubbles. And there is no doubt that we are in a stock market bubble right now. And we are in the bear rally of the stock market bubble. The only reason it's persisted as long as it has is because of a false sense of security provided by the Fed. So there has been a fairly strong bear rally from late March to early June where the stock market has covered a lot of the value that it lost in March of 2020. But personally, I decided to be in cash and some gold because I believe the stock market is grossly overvalued. And I'm not alone. Beware of not just zombie companies, but of zombie markets as asset prices become distorted and detached from fundamentals, warns Allianz Chief Economic Advisor Mohammed El-Arian. He's a pretty smart guy, and he's seeing this too. He says that zombie markets are markets that are completely mispriced. They're completely distorted. Why? Because there is a policy view that you need to subsidize everything in markets for now. And as a result, the market feels very strongly that it basically is holding the Fed hostage. And that's exactly what is going on right now. As the Fed engages in unlimited quantitative easing, it is creating huge distortions in the stock market so that the stock market is completely disassociated from real value. And all that can mean is that eventually there's going to be a horrible and deep market crash. Well, draw your own conclusions and make your own decisions. These, of course, are my own opinions and the reasons why I am sitting on cash and gold and not in the market at the moment. I don't intend to be in gold for the rest of my life. I'm just going to be in gold until I'm satisfied that economic sanity is returned to the world and that investing in securities is a smart move again. If this was useful and informative, click on the link below to sign up for my free 10-part training on how to invest in gold and get your free gold investor kit from Regal Assets. Be sure to click on the link below, and here's the URL.